Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. Have you ever wondered how do you trade the financial markets during an election? But if you want to stick around, I want to discuss the last 5 elections. Yes, I'm that old that I've seen the last 5 elections and how they've traded throughout those markets. And then we can discuss different strategies that you can use. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, so it's election day, all right? It's between Kamala Harris and Donald Trump, and it's super exciting. Markets could be volatile, markets could be unchanged, markets could be just expect everything and anything. All right, now I've traded the financial markets since about 1998. Yes, that long ago. And I remember seeing the 2000-year elections. 2004, I wasn't so much into it, but 2008, I was big into it. 2012, I was into it, but not in a big way. 2016, I was into it a big way. 2020, I was a little bit more cautious. And here we are, 2024. All right, so let's discuss it. All right, so a few variables happened. Now, I've only gone into a position 2 times in the past 5 elections, okay, going into the number. And that was in 2016. And it was also in 2008 when Barack Obama was up against John McCain. And it was super exciting, all right? Both those events were super exciting. Because number one, in 2016, you didn't really know what was going to happen between Hillary Clinton and Donald Trump. And there was a lot of just bad vibes during that time. They didn't really warm up to him. They kind of made fun of him. And, you know, she didn't really run a fantastic campaign. She ran a good campaign. So there was a lot leading up to it. And the markets had gone up significantly. And they recovered towards Barack Obama's second term. And the markets were trading about 18,000. And I had gone to a position right before it, about a week before it. And I was comfortable in it. And I just let it run throughout the response to the election results. And of course, Donald Trump won. Initially, the market sold off over 1,000 points. And then it made back about 500 points the next day. And then it kept on going north since then. Now, in 2008, it was also a very exciting time because we were going through the credit crunch crisis. And the markets had a day, although previously, that previous month, October, going into November, the markets had really just tanked, okay? We saw one of the biggest sell-offs preceding to that, right? And it was just at the end of a previous year sell-off. I mean, since the previous year from January throughout May, we sold off in the Dow Jones. And at a certain point, you kind of said, how much further could this go down? It still went down afterwards, going from October, and the markets really tanked in between October and November of that same year in 2008. And that was the housing crunch crisis. And I had a position open there as well, and it was a fantastic position. And I remember it just like yesterday. I actually was flying that day, and I held on to it, even though I don't like to walk away from the screen when I'm in position, but I was really comfortable in it, and I had money already being up in it. And that's one of really an important element of it, is just if you're up some money in the position, you have some leeway for it, especially if you believe in it. So those were the 2 times really that I went into an election with a position. But again, the market has to really give it to you. The market has to really communicate it for you. In 2008, the markets was super soft. And in 2016, the market was super strong. So there was this imbalance, okay, in the markets during that time that I felt that you could recover afterwards. And in both situations, we had what was called a fade opportunity, all right? So we're going to break it down. But before we break it down, I just want you to know anything can happen, okay? That's the truth of it. So going into a number, if you're a little bit of a cushion, if you're up in the position, is a fantastic way to kind of play a little bit of a defense. So that's something to consider as well. Also, I didn't do it too aggressively. I wasn't one of my largest positions. It was a position that I had become familiar with, and it was a position also that I kind of knew the character of the particular asset that I was trading at the time. So keep that in mind. Now, if you're playing a hedging strategy, that's also fantastic. Okay, so keep that in mind as well. There are people that use options and they're trading stocks at the same time, or they're shorting one commodity that has an inverse relationship with a Forex symbol or vice versa. So that's also a really good strategy to use. But I'm going to just break it down into 3 really simple events of what you need to do when you're trading the big events. So number 1, there's one of 3 things that happens in the market. Either the market doesn't do anything, which happens, okay, that does happen. I believe in 2004, it didn't do much during those years. We were kind of coming back from the initial .com boom and bust of 2002. So the markets really didn't do much, okay? So that does happen sometimes. Or the second scenario is that the market has an extreme move and then continues going in that direction. So it has like a gap up, okay? Fantastic response to it, and then it continues going higher, okay? That's another option. And the last option is what we call the fade opportunity. Now, the fade opportunity is super simple. It has a reaction and then has a correctional move right afterwards. So fade the news. That's exactly what it is. It's called fading the news. That's strategy number 1. And that is most often the case when it comes to these type of big news events. Number 2, don't fight the tape. If something is going higher and it's going up against you, don't fight it, okay? Don't double down because it could continue going much higher. And number 3, put in stop losses and take profits before the trade because it's such a volatile market. And if you do decide to be brave enough to do this, make sure you have number 3 in place. Thank you for joining us for this Technical Tuesday. We'll see you here next week.